Okay. All right.
Okay, I wanted to let everyone know that, hey, friends, if you haven't given it a follow, be sure to do it on X because we are going to talk a lot about the things that everyone wanted to know about, right? Ethereum, definitely a superstar in this cycle, especially in a recent month, right? We can see that, well, the ecosystem is being more and more, I would say, popular, right? Even with enterprise DeFi, right? A lot of other traditional financial industry are also interested in paying attention to this area as well. And Kevin, before I go further, would you like to first introduce yourself and introducing your project to us? What exactly is ETHGAS doing right now in the Web3 space? Thank you.
For sure. And thank you for having me. And good evening from Hong Kong, where we are, at least for the moment. So I'm Kevin, founder of ETHGAS. I've been well, I guess I first touched Bitcoin when it was single digits, and I wish I had touched more of it. But unfortunately, that was a while back, and I missed out. Nonetheless, my background is TradFi. So I spent bit over 10 years in investment banking and the financial market side. I led the financial engineering and exotics team at Morgan Stanley. After that, I got into just regular tech, built a enterprise tech company. It's a cloud business. And then, well, years later, here I am back in crypto. And so, that's how I got into this space. And, one of the things that like fascinated me with crypto, I guess is like the very nature of blockchains itself and kind of that fabric that powers blockchains. And so that's really like gas. And so like gas is this incentive mechanism that both sides of the blockchain, the validators and the users, it's what they use to communicate to one another, but it's very basic. It's very rudimentary. It's like a vanilla ice cream type of thing. And so I just felt that there's an opportunity for us to create a much more multifaceted, broad environment to trade gas, to structure gas, and kind of recreate what we see in the real world. Basically having like gas as an industrial input, just kind of like building all this like structure around the gas markets. And so that really kind of led to the initiative of ETHGAS, where today it's basically a block space futures initiative. So you can actually buy blocks of Ethereum. And you can trade them, and you can kind of like physically build the block. And so that's what we do at a high level. We can maybe jump into some of the detail, but this is an essential fabric that will power a much faster and a much more multifaceted Ethereum.
That's interesting, programmable gas, because when we think about Ethereum, this blockchain, of course, other than the ETH price, right? that, well,
Mhm.
hopefully will go past over 4,000 this year. And another thing is the gas price is quite expensive on Ethereum, especially I remember during the last previous cycle when
For
NFTs
sure.
are super popular, right? Wow, in order to mint certain JPEGs, people were willing to pay lots and lots of gas fees on Ethereum to mint an NFT. That's just amazing. So, what does that mean that programmable gas is quite interesting? To be honest, I've been hosting thousands of AMA sessions on Binance during my 3 year, 10 year over here, but this is the
Yes.
first time I ever heard about rethinking the gas fees. Well, people would, the first thing people are thinking, oh, we can just go to layer two, right? Create another layer and then very minimum, right? Minimize
Mhm, mhm,
fees.
mhm.
But instead of programmable gas, do you mind to use some simpler terms to explain it to our Binance audience? Because, well, most of us are, including me, we're kind of like living in centralized platforms, right? So we are more familiar with centralized platform, how it works. So how do you do it, and what do you use the gas for, right?
For
Are
sure.
you able to like get those gas fees from the users who were trading on Ethereum and then use it with other like any other use cases? We're so curious about it. Thank you.
For sure. Uh, okay, so there's yes, it's very different. So most people tend to take blockchains just for what they are. And most developers, you'd build maybe like an L2, or you're building like a DEX, or some type of protocol. But in our case, it's like, again, it's this very fabric that powers a blockchain gas. And so we thought, well, uh, there's a couple things. One is, let me talk about the result first. That's probably more exciting.
Mhm.
The result, and I'll work backwards from there perhaps, is that Ethereum is super slow. It's 12 seconds, right?
Wow.
And people complain like, oh, it's so slow, and you have L2s that are much faster. You have like other chains as well that are faster. We've made Ethereum real time. So what I'm saying is that basically it is possible, within a limited subset, we just hit mainnet, but it is possible to trade on Ethereum in 3 milliseconds. And so going from 12 seconds to 3 milliseconds, we basically made it like a real-time network, and we're going to grow the percent of the blocks that we can make more and more real-time. So that's the first thing, creating like a real-time experience. So this is the result of structuring the markets. The other kind of like benefit of doing this is that we can effectively like remove gas from the experience, from the retail experience, I would say as well. And so, and that's because we provided structure. So if you can provide structure in the gas market, one of the benefits is you can make a real-time network, and secondly, you can remove gas. Sorry, I'm just clearing my throat here, but maybe I'll talk about the removing the gas first, and we can maybe chat about the real-time aspects later. But on the removing the gas aspect, the way we approach it is that you think about the real world, right? Like when you're buying a coffee, it's $5 or whatever it is, right? It costs $5. And you don't think about like the input costs to buying gas, or the electricity cost that day, or the transportation cost. Like it's just $5, right? And it's not like it's $5 plus 5 cents, $5 plus 10 cents, or some variable amount. It's just $5. And so how can we replicate that experience within the blockchain world, or within crypto? And so what we've done is we basically like shifted this the onus to manage the gas onto the protocols. And so we're working with a number of very large protocols, basically saying like, hey, your users spend $10,000 in gas a month with you. And what the protocol is going to do is they're basically going to rebate that gas back to their users. So in the first step, users are going to get gas back from protocols, and that's it. And so the way it works is we go to protocols, we go to maybe like 10 or 12 to start. And if a user interacts with any of those protocols, they come to our website and they basically like claim their gas back like once a month. And so that's it. From a user behavior standpoint, they can continue to trade here, lend there, stake there, whatever that might be. And whether the gas price is, 1 gwei, 3 gwei, 5, 10, like it doesn't matter. The protocol is going to take the responsibility of that, and they'll rebate that back at the end of the month. So what we've done there is we've now shifted like the mind share and that uncertainty to the protocols, who for the most part are probably more savvy or maybe better equipped to hedge and manage and understand the gas price volatility than your everyday person. And so that's just like the real world. Coming back to the coffee, you don't want the user to think about the cost of electricity. You want like the I don't know, like the business itself to think about their electricity costs, and you want them to manage it, but you don't want it for the user experience. And so taking a step back, providing a structure for the gas markets, you can basically tackle, some of the largest issues across blockchain. As I said, we make this slow, wonderful blockchain, Ethereum, that's powerful. We can make it real time, and we can remove gas. And like, in terms of like a user experience, these are the, two most important things in blockchain technology. So I'll just kind of stop there. I can probably dive into a couple more details, but that's what we do.
That's really interesting. And so your team, the ETHGAS team, has already successfully like asked different protocols like to give rebates to the users, right? So where can we claim those gas fees back? Do we go to gas official website?
It'll be coming soon. We haven't yet announced it publicly, but we've basically locked in, I'd say, our first cohort into that. And so, if there are developers out there who'd like to work with us, please reach out. But similarly, if there are protocols that you interact with regularly, just ask them. Say, hey, would you guys be interested in joining this gas rebate initiative? Because it's good for users, good for the ecosystem. It improves the user experience. And so, the more protocols, the more users we have that believe in this vision, the more that, like, the faster it'll kind of become a reality.
That's really interesting. But why were the protocols willing to collaborate? Because that's their profits, right? Those gas fees that they collected.
Well, yes, yes and no. Right. To start, the way it's structured is that the protocol, yes, they're going to pay for these fees. So it might be 20,000, 50,000, or even 100 for some of the guys we're working with. But what'll happen is that, let's say it's like a DEX, for example, and you're paying a 10 basis point transaction fee. What'll happen is that after we roll this out for 2 or 3 months, we're going to be getting feedback to determine, like, hey, how has user behavior changed? Like, do they trade more when the market is busy? Because maybe previously they were hesitant. And so, how has the user behavior changed? We'll study this data, and what'll happen is that instead of that 10 basis point fee plus a variable gas amount, what the protocol will do is to say, okay, our fees will be 10.5 basis points. So they're going to effectively pass back the gas fees back to the user, but it'll at least be fixed. It'll be a fixed price. It won't be variable. And so, yeah, again, to start, currently it's 10 basis points plus some variable amount. But after we get some data, it's likely that the protocols will say, hey, we need to bake in the cost of gas into the user experience, but let's just make it fixed across every user and kind of socialize it. And so that's the end vision, where again, the user still doesn't need to think of it. They're paying for it, but it's like there's no mind share. You're just going to hit trade, basically.
Interesting. And do you mind to review how many protocols already agreed to collaborate and give the kind of?
Sure. I can't say who yet, but we have between 8 and 10. I'd say there's like 8 where, and these are not small protocols. They'd have 80,000 plus followers type of thing. They're quite large. Yeah, so there's 8 to 10. I think 2 are probably confirmed. We just need to kind of firm up on them. But we'll be rolling them out probably for September, when everyone's kind of back to work, school. Yeah, so that's what we're doing there.
Nice. Okay, so we need to pay attention to ETHGAS official announcement, and it's really, really important because we might be able to get our gas fees back. And are we going to limit Lee's kind of collaboration just within the Ethereum ecosystem, or will you expand it to other popular blockchains, for example, Solana? Like we already spend a ton of gas over there when we trade memes, right?
Yeah, for sure.
Mhm.
So, we're starting with Ethereum just because that's what's the name of our company as well, ETHGAS.
Ah,
But
right.
conceptually, it applies to any proof of stake chain. Well, I mean, it applies to kind of any chain, really. So yeah, we'll be starting with Ethereum. We have some other EVM or Ethereum chains we'll be working with. Solana's in the pipeline. We're not going to hit it day one, but we've started development on it already. So stay tuned for that also.
Yeah, think about that. If Pump Fund, they were willing to provide us some rebate, right? Or just some like our I know it's money back, but our trading
Yeah, yeah, yeah.
back, right?
Yeah,
And they
I mean,
give it
they're not going to pay you.
money.
They're not going to pay you the fees that you paid, like last month or last year, right?
Right.
But like, at least going forward, the whole point is like just don't make your users think of it. Like, don't make it like a blocker. Like, oh, gas is high today. Like, oh, don't trade. Should I trade? It's like, that like if we can just shift that responsibility to the protocols, that'll just be so much easier for users. And again, you kind of need like a critical mass of people doing it from a like if it's just one person doing it, you can't really get that that social traction or that inertia to kind of make it happen. And fortunately, we just have like a really supportive ecosystem around us who have always thought about this, and now we just have the heft, we have the network to kind of make this happen. And not to mention the platform and protocol for the platforms to actually hedge the gas themselves. So once this DEX or that lending protocol is responsible for the gas fees, they can actually come to us as enterprise users or like B2B users and just hedge gas with us. So it's kind of full circle in that respect.
That's really nice. And Kevin, you actually just mentioned that the previous gas fees that we already paid might not be able to, we might not be able to get them back, but moving forward, we might get the future
Yes.
like gas fees that we spend back, right?
Yeah. The point is, the goal is to have this just the goal is to just have this be the de facto, the primary use case just going forward. And so the first step is economically transferring the responsibility to the protocols. And then after that, it is to basically automate the entire process. So to start, you'll need to come to our web. We'll need to ask the protocols, hey, you need to send us like $20,000 or $50,000, and they'll do that once a month. Users need to come to our protocol and claim the gas fees back. But it basically puts pressure on us to automate this process where it's all written in code. It's all done through zero knowledge proofs to the extent we can. And just so the whole entire process just runs more smoothly. And so we're basically trying to crack down the proper user behavior and flows, and then it'll be automated, and then hopefully we never talk about gas again. So we'll see where we are 12 months from now.
That's really interesting. Then why would people need to build Ethereum layer 2 if we don't need to worry about gas? And originally, lots of Ethereum layer 2 were built because of the super expensive Ethereum gas fees, right? Interesting.
Yeah, so like the users won't need to think about it, but still the protocols will need to think about it. So if a protocol is paying like 100,000 gas on L1 and they're paying like 5,000 gas on L2, they might think like, oh, maybe we should just try to promote L2 more than L1. So yeah, but from a user perspective, it's up to you, right? So yeah.
Got it. Because today I was just reading a post regarding layer 2, how much profit they made so far since their launch. And basically, well, the protocol was that they made money out of the gas fees, right? For example, like Base, the most popular layer 2, has earned $127 million since their launch. And
wow.
Yes, from the gas fees and something else, but I think mostly gas fees. It's just crazy. So a lot, even though when we think layer 2, we only need to spend minimum gas, right? Still accumulate.
Yeah, and you think about it, it's just a computer running lines of code. And does it actually cost 120 million to run that? I don't know, but Base has a strong community, right? And so they're entitled to benefit from that as well.
Okay, so Kevin, since you are kind of like an expert of gas fees, do you mind to let our audience know about? People are curious. We are wondering why do protocols charge us gas fees if those are just some simple codes?
Well, the protocols, well, it's not really the protocol charging it. It's like the blockchain itself, and it's because of basically someone has to validate and someone has to power the blockchain, and these are the validators. The validators are running like infrastructure, like it's actual computers sitting in data centers or cloud or like bare metal in different places around the world. So they actually need to run this infrastructure. And so when you pay gas fees, you're actually paying for these network of computers to pay their electricity, to pay for their bandwidth, for the security, for the network, for the teams to maintain those servers, for the storage as well. Every time you add a trade to the blockchain, you take up more storage on the chain. And so you can basically break this network into, it's like AWS cloud, right? It's like, oh, here's my storage cost, here's my network or bandwidth cost, and here's my cost for memory and stuff. So there are initiatives actually just out today. I can't find one of my screens here. There's an initiative in Ethereum to have what's called like multi-dimensional gas. It's not something the retail people have to think about, but it's basically that within the background, there's multiple different like AWS services that are run, and how do you price these accordingly? So ultimately, someone has to pay for these computers. And really, gas is a novel concept. It just simplifies into a single number. But nonetheless, like someone needs to pay for the validators to run these computers, and it costs money to run these validators as well. Maybe that money can be used somewhere else. So there's like a cost of capital associated with it. But so that's why blockchains charge for gas in general, or should, because there's a physical cost involved.
Got it. Thank you so much, Kevin, for letting us know about the fundamental question over here. And I see we got some audience saying that actually ETHGAS, not just about gas fees, but also making seamless on-chain UX, and also like make the future feels real time. So what does that mean? Like by making blockchain real time, Kevin, do you mind to also elaborate on this? This is actually
For sure.
feedback from our audience. That's really nice. Thank you.
For sure. So maybe if it's okay, maybe I'll share our exchange on our test net, or I'll share a screen if I can just pull that up. Give me 1 second here. We're going to really dive into the weeds here, but okay, is that coming up? I think that should be showing up.
Let me pin this so our audience. Ooh. Okay, this is probably the largest I can do now.
Okay.
I can shrink myself because I wanted to. Okay, now a bit larger.
Okay, so I'll talk about it technically. So the way it works is that we basically go to the validators. So Ethereum has a bunch of validators. When you stake ETH with Ethereum, you become like a validator. And today, I'm not sure what the price is this second, right? But let's just say like ETH is, shy of $4,000 or $3,500. So there's about like $110 billion of ETH that's staked, and all these folks are validators running the network. And so every block on Ethereum, one validator is chosen to like propose or select a block for Ethereum. They're the ones who are responsible for adding each block. So what we've done is we've gone to the validators and said, why don't you guys sell this block space in advance? So sell it in advance through our marketplace. And that's what we have here. And so I'll just zoom in if I can. So up here, this is where the validators are selling block space in advance. And so if I wanted to buy this block here, the price is 5.8 Gwei. And you can get the entire block of gas and do a couple things. You can buy and sell the block. You could build the block if you want to be a block builder, and we have some ways to do that. You could, if you're a trader, you can do some MEV strategies, or maybe you could do nothing. You could just buy a block of gas and do nothing. That's entirely up to you. But what's important is that as these future blocks roll down to now, when you have like the next block, what we can do, or what the person can do, is they can say, well, I want to sell off like slices of block space. And so to do it like a transfer, or like, let's say do a swap on Ethereum with Uniswap, it costs, say, 200,000 gas. So whoever has the block at that point in time, they can sell like 200,000 gas units in real time through us. And what that means is that, if you have like people flowing in who need transactions, you could just sell this gas like again and again and again in slices of 200,000 units. And that creates like a real-time experience. And so anyone who wants to put their trade into the current block, you have this certainty that like, you don't need to wait 12 seconds for it. At the 1.3 second mark, you say, I want to put this trade in. Can I get it in, yes or no? And you get the confirmation like instantly in like 3 milliseconds. And so that's effectively what happens is through this process, the validator gives their block space to an off-chain user like us or like a trading firm. And we can then kind of resell that block space in real time. And so that's how we create that real-time experience. It's acting on behalf of the validator, who is traditionally constrained to this 12-second block. But when we move this block into a low latency trading environment, we can sell slices, and that creates this real-time experience for Ethereum. So I've really kind of gone into the weeds there, but that's how we do it. And so with a block of gas, you can put maybe 1,000 trades in 12 seconds, for example. Actually, sorry, far less. You could put, say, like 600 trades in 12 seconds, which is quite slow. And so right now, that's the limiting factor. We can sell the block space super quickly, but still you run out of block space very quickly. And so that's where L2s come in, because L2s provide unlimited kind of like bandwidth or throughput, but we provide the super low latency experience. And so when you get kind of the L2s with unlimited bandwidth, and you get us with the real-time experience, together Ethereum becomes a real-time network with unlimited transaction, unlimited throughput. But yeah, that's the end game for blockchains, right?
Interesting. So, Kevin, how would you define ETHGAS? It's not layer 2, but it also has a lot of, I would say, benefits of layer 2.
Yeah.
How would you define? How would you introduce
sure.
ETHGAS to like non-tech person like me?
It's a block space futures initiative. So it's an entirely new industry. I'll start with that, right? It's a crypto native commodity trading, but it's more like a layer 0.5. So we're actually before Ethereum as like an L1, right? So L0 would be like your traditional networking and cloud infrastructure around the world, like your physical world that we kind of are used to from a networking perspective. In between the traditional infrastructure and the blockchain infrastructure, the L1, we sit right in the middle. And so we provide that like 0.5 experience, that real-time experience. We're not on-chain, but we're at that intersection between on-chain and off-chain. So that's where we're innovating. And so when you get us with that low latency there, plus the L2s with the bandwidth, that's, they both kind of serve the L1 in the middle.
That's really interesting. Thank you so much. Yeah, for letting us know about that. And I'm trying to digest, because there are a lot of new information that I never touched before.
It's an entirely new space. It's like, like in the real world, we have like commodities trading, right? Like you have energy trading firms or oil trading, or people trade agricultural products, and airlines trade gas, right? That's a common one. But like, we don't have it in crypto, right? And so this is the first instance of it, right? It's a crypto native commodity, and you think into the future. There's so much innovation at like the application layer, right? Like, all these protocols, or like you have these services or AI agents doing like a whole bunch of things, right? But all of this is going to come back to like demand for block space. And, fast forward 5-10 years, like block space will be like the single most valuable instrument in crypto. Like it'll be so scarce. Everyone will be fighting for this block space. And so to the extent that we can just provide some structure and some programmability and kind of just like jumpstart some of these initiatives, like, super excited. We have a bunch of like AI agent teams who want to like work with us to be able to automate certain types of transactions. Like, there's like the Bybit hack, for example, earlier this year. Like, for example, we could say like, oh, if someone's going to transfer from this address to this address and it doesn't meet some certain threshold, can we like block that transaction, right? And like, yes, you can make this type of thing programmable. Or if there's a whole bunch of other use cases, but it's like this just-in-time experience that we want to make programmable and enable developers, protocols to just get involved. And we have a lot of work to do. As we make it real time, we need to reach out to protocols and say like, hey, Uniswap, would you like the price to update in real time on uniswap.org, right? And so right now it's just like a swap, like interface where you just swap from A to B. Actually, I'll get rid of my interface here, but it's working with protocols to create a Web 2 experience, right? So again, like a DEX, you could have it look with like a traditional trading view or Binance, right? And that's possible. So imagine like Uniswap and Binance having like the same user interface. Like that'd be pretty cool. And then like separately working with like wallets as well to say like, hey, wallets, what do you guys want to have that? Do you want to support and get involved in this real-time experience for your end users? Because your end users are frustrated because when they hit like the trade or the swap button, it's like, oh, is my trade going to go into this block? Like, I don't know. Like, and so it creates all this uncertainty. So we need to work with, the protocols to upgrade some of their services to be real time, work with the wallets to do it. There's a lot going on, but someone's got to do it. And so if anyone wants to get involved and join us in some capacity, we'd love to, love more friends in this, in our broader mission.
That's very interesting. Thank you so much, Kevin. And you actually just mentioned that, well, pretty soon protocols will fight for block space. So actually, those are not unlimited, right? They're limited block space.
Well, so currently it's limited.
Okay.
Currently it's limited. To some extent, it might be unlimited, but the unlimited part will only be for like very basic transactions, maybe like just transferring. Right, so like I transfer from me to you, or so on and so forth, and that might be unlimited in that respect because you're not really bothering anyone else in that process. Where it might be limited is like as a part of a DEX, and so where it might be limited is that you can only process so many trades with a DEX because maybe there's no more liquidity or maybe the price moves too much. So there's certain parts that'll be very limited and scarce, other parts where it'll be like unlimited, but this is also completely new territory. We don't have all the answers. So part of coming here today, and thank you again for having me, is just getting this out there because there's, again, we're opening up all this new territory. We've talked about real-time blockchains. We've talked about like removing gas. These are big initiatives, and we want to make sure we involve everyone in this process to just to make sure we do it properly and in a scalable way.
That's right. And have your team discussed with Ethereum Foundation? I believe they earn a lot of money by getting gas fees from us, right? If they could find a rebate program, that would be awesome.
Yeah. So short answer, yes. So we've been fortunate to be working. I mean, we don't work for the foundation, of course, right? We're just like a standalone initiative, but we've been working, I'd say, in concert or alongside many people in the foundation, more on the research side. And so, there's a conference at ETH Denver earlier this year. We were in Cannes in France. It was really hot there in July for ETHCC. And we had the foundation speaking at our kind of side event, but some researchers from the foundation have come out and said, look, Ethereum is 12 seconds. It has, in relative to other chains, it has unprecedented like security, diversification, uptime, and just like diversity of validators. And so from that respect, it's quite powerful. And we can get the blockchain from 12 seconds to maybe 2 seconds, or maybe even 1 second. But beyond that threshold, there's a lot of work to do because you have validators really all around the world. But the thesis is that people will want a real-time experience. And the only way you can offer that real-time experience, and this is what the researchers are saying, the only way you can provide that is with guys doing stuff like what we're doing. And these are called like pre-confirmation or block space commitments. And so the only way you can make Ethereum real time is this. And so they're not saying like, oh, we love ETHGAS, it's the best thing in the world, right? I mean, of course I would love that, but it's like this area that we're innovating in, it's a super interesting area because it's recognized as being able to unlock this user experience of like 10 years from now. We can kind of unlock that today. Maybe 10 years from now, the Ethereum mothership can actually be real time, but in the next 5 years, it has to rely on like off-chain partners and ecosystem players to enable that user experience. So yeah, been speaking with the foundation, and they're supportive in general. Of course, they want to kind of like build more demand. They want to have like a better user experience. We also help the L2s roll up to L1 faster, more cheaply, more easily. So it all ties together.
Nice. Thank you so much, Kevin, for letting us know about that. And we also have some audience that are curious about the team. So do you mind to introduce the core team members' background to us as well? Thank you.
Sure. So, I mentioned there's myself, which finance and cloud computing. There's we have a mix of folks. I guess yeah. Well, we have a bunch of folks from like where do I start? We have we split our team into kind of two parts. We have our like traditional maybe like Web2 team that builds our exchange engine, and then we have our blockchain team separately. We have folks from like crypto.com, from Consensus, from like some of the lead like Sushi Swap. We have from Dexes. We have guys who are searchers and like MEV traders on our team. We have folks who have taken a stab at like block building, but yeah, it's quite a diverse team that we have here. I'd say half the team has maybe half the team has like a master's in like computer science in some respect. Yeah, so it's a pretty broad team. I guess investors wise as well, we will have an announcement coming out soon. But we have some tier 1 US investors who are leading our Series A, and we'll have more to announce on that pretty soon.
Nice. Thank you so much for letting us know about that. And is it okay to also ask regarding TGEs, because our audience are curious about, will ETHGAS also go through the traditional route like launch a token and TGE, etc., or do you have any other ways to make profit? Thank you.
Sure. So quick answer, yes, we'll have a TGE. Timing isn't fixed yet, but we're getting close to it. And so there's a couple things that we're working on first. One is just ramping up our marketplace. 2 is kicking off this gas rebate or gasless initiative. We want everyone to touch and feel that experience of like, hey, I'm getting gas back. Like, that's pretty cool. And so we want to kind of like go through that experience first, and then we will get involved in kind of like the listing process. Separate to this, and I can talk about maybe some of the tokenomics around the token as well, but also alongside this, there's, in the news, all this like Wall Street interest in Ethereum. There's a lot of these like ETH treasury companies that have come out, like SharpLink and BitMine, and a handful of others. But all those major ETH treasury companies, they will be staking their ETH. And the beauty of what we're doing is that, well, we will be powering the returns for all those guys as well. And so we're excited to kind of partner with all those folks also. And so as these things come into play, we'll then eventually have our TGE. Maybe it'll happen in a few months, maybe not. Don't quote me on that, but that's general timing. In terms of the token, there's two parts to what we're doing. One is, well, we are an exchange at the end of the day. It's people buy and sell block space. It's largely institutional to start, but the token will provide governance over where do the fees in the protocol go. But currently, within the pipeline, there's a few $1 billion of fees in the pipeline today already. So as we start to insert ourselves into the pipeline, we will invariably start to have a couple $1 billion of fees flow through our exchange every year. And where do these go? And so governance will help to dictate that. Separate to that, the token will also be used for different roles in our real-time system. And so we'll be opening up some of our infrastructure to outside players as we look to slowly decentralize, certain components of what we're doing. And the token will serve as a way to, motivate and incentivize people to get involved. So basically, you'd have to stake our token to run a part of our service. And these are the two areas. So one is just for governance, and the other is to participate as an infrastructure player in our service itself, in the real-time network.
Got it. And nice. Thank you for letting us know about that. So friends, if you would like to be part of the community, right, definitely need to follow ETHGAS, and they are going to probably launch their token TGE in a few months. So Kevin, which means that along the way, while ETHGAS providing rebates to the, what should I say, Web3 users, that the team is also getting ready toward TGE. Then what's the plan post TGE? Do you guys plan to collaborate more protocols to expand the?
Absolutely. Yeah.
Okay.
Yeah, absolutely. So the pre-TGE, it's really just like setting up the core infrastructure and fabric to what we're doing. As I said, we're building this real-time economy. And so before TGE, our block space futures initiative will be live, but are all the protocols going to be real-time yet? Probably not by that point in time. And so over the next, 12, 24, 36 months, we have this initiative to bring more protocols on board to offer that real-time experience. And so, there's two parts: bring protocols on board for the real-time experience and bring them on board for the gasless experience. And together, both of these are going to drive a lot of demand for Ethereum and a lot of demand for these protocols. And for us, as it relates to our token, I think the beauty of what we're doing is that, we're providing this incredible user experience for the blockchain, and you wouldn't want that experience to go away. And so that's the beauty of our token. By staking it and getting involved, you're supporting this real-time experience. If you kind of unstake and kind of remove that token, then the blockchain would it would revert back to its previous state. And so we're pretty excited that the more people like the real-time experience, the more they're going to stake, and the more they're going to want it to be even faster. And so we think that will create this increasing demand for our token and for just the user experience. Ultimately, it just comes to do people want a real-time experience? Yes or no? And they can use the token however they want to get involved in that process.
Well noted. Thank you so much. Yes, sounds like the team already have a lot of great plans for post TGE, right? And well, how would ETHGAS attracting users, and then to also, actually attracting users right now in the Web3 space is an issue, right? Especially we really don't feel like we have a lot of new Web2ers joining Web3. Let's cycle other than maybe playing some meme tokens, right? Or buying props, right? During that period. But after that, not really feeling any new users swarming into Web3 space. So what's the plan for ETHGAS to attract more users, and also, of course, to make them come back day 2, day 3, and etc. Retention, right? It's also really important. Any marketing strategy or growth strategy for ETHGAS?
For sure. So we have some stuff that we'll be rolling out very shortly in that regard. There's probably a couple aspects to this. One is from a user perspective. Let's talk Web3 users first to start. So again, we're partnering with all these different protocols, and day one we have, say, like 10. The next month we have 20, 30, 40, 50. The beauty of what we're doing is that every one of these protocols users who wants the gas rebates, they kind of become our users, right? And so if this one protocol has 50,000 users, well, their 50,000 are going to come to us every month and get this gas rebate. And they're going to see like, oh, how does ETHGAS work? Like, what else can I do here? And again, so every single one of these protocols will be our users as well in some respects. So that's an easy way to scale. And so instead of targeting like, instead of being kind of B2C from like an acquisition standpoint, we're B2B2C. So we acquire other protocols to partner with us, and then their users end up becoming our users. So it's a very scalable way to attract users, and that's the Web3 user acquisition process.
That's really smart.
It's pretty cool. So in that respect, if we partner with two protocols, then boom, we get their users to be ours.
Exactly.
Right? And today we don't have competitors. Like it's not like we're doing like a vampire attack on someone else and like we're going to take their users and steal their liquidity. Like, no, this is pure innovation. It's like, this is real time where we're moving gas and like everyone wants that, right? So that's a beauty. So we can basically, B to B2C is, I guess, the technical term. For every other business or protocol that we work with, their users will inherently become ours. And so it's far more scalable from that respect. I'd say so that's Web3, pretty cool already. And I guess ultimately, like, how many people pay for gas? Like that's a lot of people, right? So that's the scale of what we're doing. Now, outside of it, I can't promise we're bringing in like, Web2 users or like a whole bunch of those into this space. So what we're doing is much more specific to Web3. But I would say that the institutional money coming into crypto, as I said, the ETH Treasury initiatives that we see in a lot of the press, that's powered by institutional, like Web2, TradFi is probably the better word, by like TradFi funds and institutional investors looking to participate in this space. And the way we work with them is we simply just power higher returns. And so I didn't actually touch on this earlier on, but again, with our marketplace in between the validators and the users, if we provide a better user experience, the users pay more money, and that money flows through us to the validators. So across that $100 billion of validators, they're all going to earn higher returns. So the ETH staking rate, it's, let's just say 3% right now. We think we can raise it like 1% over time. So that's another $1 billion just flowing through all the ETH validators across the world. And so as institutional money comes into the space, we will be one of the primary drivers of yield for those institutional players. So pretty excited for that as well.
That's just amazing. And Kevin, just like you said, right now, there's actually no other competitors for ETHGAS, right? Because from my own personal experience, at least I don't see any other projects like ETHGAS.
That's correct. Like there's some other folks in this space, but the thing with us is that you can trade block space. I can buy and sell, and I can do this in real time as well, right? Like there's no one that's as far along as we are. We've done some, community events, and there's other people building in this space, but we have an extremely robust system. We've had to completely rebuild like a centralized exchange-like experience, but then tailor it for block space. So we've put a lot of money and time into this, and no competitors with a similar type of product.
Yes, especially, I don't know, but this is just brilliant. How did you guys come up with this idea of the gas rebate? I believe everyone would love it, because who wanted to pay gas fees at all, especially on Ethereum?
Yeah, well, that's the beauty of being at this fabric. You can do so many things, and so again, we don't know what else we can do, but it's an entirely new industry. It's an entirely new vertical, that we'll control. But coming back to getting the idea for this, what actually happened was that I got COVID, a few years ago, and at the time we had a young child. And my wife was like, "You have COVID, get out of here, go stay in a hotel." So I stayed in the hotel for like 3 days, kind of self quarantine or whatever. And I was like, man, I'm stuck here. I was like, I'd always had this idea of like block space futures and gas, so I just took that time to kind of like write the white paper, kind of like think through it, like go through the schematics, and that's anyway. I'm glad I got COVID at that point in time.
Wow, and you also still had energy to function your brand. That's just amazing.
Well, of course, because I don't have a screaming like newborn, right? So for anyone who's had a new kid, you love your kid, but you want some space as well.
Got it. Oh, nice. So basically, the idea actually grew with your child. This is just awesome.
In some sense, yeah. Well, it's something I've always wanted to do. Like, I don't know, like 5-8 years ago, I was just kind of like really interested in like the gas markets, and again, like this fabric or this ether that powers the blockchains, and it's like, I was like, that'd be a really cool space to build in, and well, here we are.
Nice. So another interesting question is, when we claim the rebates from ETHGAS, do we still need to pay the gas fees during the process?
Yes. Yeah. Okay. Yes. So this is one of the challenges in kind of like making the whole process seamless. So it's technically possible to sponsor the gas fees every single trade that you do, but that involves like a lot more gas. So if you're paying $1 in gas, you have to pay 25 cents extra like every single time, and so again, it can be quite expensive to do it on a trade by trade basis. So what we've done is we're doing it on like a batch basis. So the protocol just does one transfer to us like end of the month, and so they only pay like 25 cents or 50 cents for that transfer. Similarly, the user can come to us and they can claim the gas back from like 8 or 10 protocols in a single transfer. So
wow.
instead of having to do it trade by trade, it's like, well, it's just one transaction, and you don't need to claim it back every month. You can just like leave it there, and 6 months later you can claim it, but you will need to pay that gas. Yeah,
that is still really, really smart. We don't have to just like, okay, claim one over here and the other one over there. Just one stop solution, which is really smart.
Yeah. We'll just centralize and take in all the gas rebates, and so you're just like, click, got it back whenever you feel like it. We'll probably have a mechanism where we'll auto stake that ETH for you, just so it earns a little bit of yield in the meantime. And like, maybe some months later, you're like, oh, how much ETH do I have? And oh, it's actually grown, at a 3-4% return or whatever. So, we'll maybe do something like that.
Nice. Thank you so much, Kevin, for teaching us a lot. And I have to share my screen as well, because I see that we're being featured on the front page of Binance Live. I just want to show you and also show our audience. And also, by the way, it's actually about an hour of our AMA section. I remember
time flies.
Yes, I remember before our AMA, you were kind of like, oh, do we have so much to talk about?
Yeah, I was like, oh my God, Moonlight, I'm so boring. I don't know if we'll want to get through this, but thank you for making it easy for me. I really enjoyed this.
Thank you so much, Kevin. And especially right now in Hong Kong, it's quite late night already, right? Close to 10 p.m. Thank you for spending your precious time with us. And well, we don't want you to get COVID again, but we definitely looking forward to another more brilliant idea from you, right? And to
thank you.
Yeah, make the Web3 space a better place for everyone. Thank you so much for your time.
Absolutely. All right. Thank you for having me.
Thank you. And feel free to log off our backstage. Have a good rest of the night.
All right. Bye.
Bye. Thank you.